Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
Well, we look forward to the rest of 2022. It's likely to be the case that inflation is going to dominate both political discourse and talking about what's going on in the economy. But this inflation that we're experiencing in the United States is actually a worldwide phenomenon. Last year, the inflation rate in the United States was about 6%, but it was also about 5% in the EU, and even Japan, which has been having deflation for decades, the inflation rate turned positive. All around the world, central banks have been keeping interest rates very low. In the United States, our rates are near zero, but they're also near zero in the EU because the ECB is keeping rates very low as well. The result has been what we call negative real rates all around the world, with inflation rates substantially higher than the interest rates that are near zero. Now, the big question for 2022 is going to be what the central banks and the governments which control fiscal policy are going to do about all of this inflation. The UK central bank has recently started increasing interest rates. The Fed in the United States has essentially backpedaled or changed its views. It at one point said that it was not going to raise interest rates until 2024, but now it says it's going to start raising interest rates perhaps next month, and there are going to be multiple interest rates this year. Now, what is actually going to happen is extremely controversial and extremely uncertain, because we don't know exactly what has caused this inflation, and therefore we don't know exactly what's going to make it go away. There are a couple of different views on this. One view is that the inflation has been caused by the coronavirus pandemic, but this rather simplistic view doesn't address all the complexities that may be going on with the coronavirus. In the first place, the coronavirus itself may have decreased demand quite a bit by forcing people to stay at home and not work. That not only prevents people from participating in the workforce, which itself might be inflationary by creating labor shortages, but it also decreases the demands for goods that would occur as a result of people not having work and therefore not having income. So a lot of the inflation that's been happening, both in the United States and around the world, probably is not due to the coronavirus itself, but rather due to the government policies to deal with the coronavirus. And these policies have included exceptionally expansionary fiscal policy and also exceptionally expansionary monetary policy at the same time. This has put huge amounts of money in people's pockets and driven inflation by driving demand for goods. It's also encouraged people with lower incomes to stay out of the workforce, and this has created labor shortages, especially of the less skilled people in the workforce, and that is driving inflation in some sectors of the economy. As we look forward to 2022, the coronavirus is likely to go away, not only in the United States, but also around the world, and we will find out whether the coronavirus going away is inflationary or deflationary. As I suspect the coronavirus going away is somewhat inflationary, then to prevent inflation from running out of control, central banks are going to have to raise interest rates, perhaps substantially. And at the same time, fiscal policy is going to have to change to be perhaps not as expansionary as it's been in recent months. So looking ahead, I expect a great deal of uncertainty about what's going to happen in the United States and around the world. The UK seems to be a leading indicator, with the central bank already increasing interest rates, and we're probably going to see increases both by the ECB and the Fed in the United States in the next several months.